Hello everyone, first and foremost, I'm going to introducing our group member, which are, the first one is me, myself, which is Fatin Husna, the second one is Anifah, the third one is Amanina, and the fourth one is Atika. So we are from the class BA1195A, and we are in the Diploma Banking. Hello, okay, my name is Fatin Husna binti Khairul Anwar, so my ID matrix number is 2021214656. Next part is introduction part. So for this case study, you guys need to understand that we have been assigned to do industry overview. We need to focus on the role of credit officer in analyzing and evaluating business that's seeking funding in the banking industry. So in this case, we are going to be as a credit officer in RHB Bank, and the company that we are going to evaluate is the Green Plantation Sdn Bhd. Okay, this Green Plantation Sdn Bhd, it have been established in 2000 and it's have a major player in agriculture. For the director of this company, it have three, which is the first one is Mr. Abi Lee, and the second one is Mr. Abi Chan, and the third one is Mr. Ahmad bin Ali. Furthermore, this company, it focused on the 50-hectare oil palm plantation that managed by Mr. Abi Chan. And they are already planning to expand their 50-hectare land and acquiring 50 more hectares. The analyzing tools that we are going to use for this company is we are going to use the method of 5 C's: the character, capacity, capital, condition, and collateral. And the second one is Chapari techniques, which is the character, ability, margin, purpose, amount, and repayment and insurance. Okay, the next part is borrower background. The first one is founding and operation. So this company, which is the Green Plantation Sdn Bhd, it have been founded in 1st January 2000, and it have over 20 years in the agriculture sector, and it is a limited liability company that registered under Company Act 2016. Next is mature oil palm plantation estate and shareholder information. For this company, they have already possesses a 50-hectare mature oil palm plantation estate, and the main product that they produce is fresh fruit punches (FFP). For the shareholder, it include Abi Lee, Abi Chan, Abi Angela, Ahmad bin Ali, and Agri Venture. The third one is corporate structure. So this company have private limited business, which is the Sdn Bhd, and limited liability that protects our shareholder personal asset. And this distinct legal entity with the ability to enter agreements on property and incur liabilities independently. Okay, so we already end the borrower background. So next I will pass to the next part to the next presenter.
My name is Nur Amalina binti Zlain. My number matrix is 2021652554. Green Plantation Sdn Bhd is evident through its established history and management. The company has been operational since 2000, focusing on the cultivation and management of all palm plantations in Sarawak. The guarantors are Mr. Chan, Mr. Lee, and Mr. Ahmad. Its leadership, particularly Mr. Chan, who holds an MSc in plantation management, has been steering the company since its inception. This long-term management indicates a stable and committed leadership. The capacity of a borrower is assessed based on their ability to repay the loan. The borrower has been granted a 1 billion ringgit loan with specific allocations for different aspects of the project, which include 500,000 ringgit for oil palm development, 300,000 ringgit for machinery, and 200,000 ringgit for working capital. This detailed breakdown shows that the borrower has truly planned the use of funds, which indicate a strong understanding of the project financial requirement. Furthermore, the 10-year duration of the loan combined with the reasonable interest rate, which is BLR plus 2%, suggests that the borrower has been evaluated as having the financial stability and revenue projection to manage and repay the loan over a long time. This careful planning and structured approach to finance reflect a strong capacity for debt management. The loan obtained by Green Plantation Sdn Bhd totaling 1 billion ringgit is a strategic step toward expanding their oil palm plantation. First, 500,000 for upland development expenses. This significant portion of the loan is dedicated to meticulous land preparation. It involves clearing the land, assessing and ensuring soil suitability for upland certification, and systematically planting upland. This phrase is crucial as it sets the foundation for plantation's future productivity and yields. Precautions and care are essential as the initial step here directly impact the plantation success in the years to come. Proper land preparation contributes to healthy plant growth and ultimately higher yields. Next, 300 ringgit for machinery. This allocation is focused on acquiring various machinery to ensure operational efficiency and productivity. Key acquisitions include harvesting machinery, vital for efficiently and timely collection from fruits. This machine must handle the plantation skill and adapt to various stages of plant growth. Additionally, transportation vehicles are essential to minimize delay between harvesting and processing, maintaining fruit quality. Investing in quality machinery not only boosts efficiency but also reduces long-term operational costs through improved durability and lower maintenance requirements. This investment is crucial for the plantation's operational backbone. Lastly, 200 ringgit for working capital. This fund covers labor costs, ensuring the plantation has skilled workers for harvesting and maintenance. It also provides the machinery upkeep and the purchase of necessary supply like fertilizer and pesticides. Moreover, it serves as buffer for unforeseen expenses, enabling the plantation to operate smoothly without disruptions. Effective capital management is vital for maintaining daily productivity, which in turn contributes for the plantation overall profitability. Proper managed working capital ensures that the plantation remains operational and productivity.
Assalamualaikum warahmatullahi wabarakatuh. My name is Alifah Laina binti Rosti. My matric number is 2021206486. I will talk about the source of income and cash flow of the green plantation STM-BHD. As you look at the table, green plantation STM-BHD has experienced a consistent increase in revenue over the past 5 years, with year-over-year growth rates fluctuating. A remarkable 60.4% surge in 2019, a negative 8.5% dip in 2021, and a notable rebound of 29.4% in 2022. The profit before tax has been significant improvement, showcasing a rising trend and an exceptional year-over-year growth of 908.39% in 2022. Additionally, profit after tax has notably advanced, especially in 2022, boasting a remarkable year-over-year gain of 4,310.93%. The summary underscores the absence of recognized or paid net dividend and minority interest during the reported periods. For the cash flow, we can analyze green plantation STM-BHD financial reveals several key findings. First is profitability and cash flows. The company's profits, notably in 2022, suggest an upward trend, boding well for operational cash flow. Improved profitability often correlative with better cash flow, are positive indicators. Next is minority interest and dividends. The absence of recognized dividend and minority interest mentioned as 0.00 prompts an examination of the company's cash distribution procedures. For lastly, year-over-year growth, the impressive year-over-year growth rates in 2022 for both profit before tax and profit after tax signal improved operating cash flow. However, fluctuations in growth rates should be approached with caution as external factors can influence the variation.
Hi everyone, thank you for joining today. We will talk about the collateral provided by Green Plantation Sdn Bhd. My name is Nur Atika Shamila binti Abdullah. My matric number 2021616528. The collateral provided by Green Plantation Sdn Bhd is a 50 hectare agriculture land located in Sarawak under land title number 10002023S. This land has a current market value which is 5 million. Furthermore, as we can see from the credit application, this firm
is encumbered with a first charge to RHB Bank as a collateral for the. According to the case study that this firm also provide land valuation report. As we can see, this land has been evaluated by professional real estate valuer by Sedia Berhad in Kuching, Sarawak. This land be valued by Sir William John and Sir Ahmad bin Ali. Next, we will move to the guarantors part. As we can see, the guarantors of this firm which are Mr. A. Billy, Mr. A. Bichan and Mr. Ahmad bin Ali. They are owner and director of the firm. Guarantors that have the ability to guarantee if the land is not able to cover the loan. So they will face the consequences by referring their job position. All of them is important person in the company, and they are also contribute some capital in the firm. So by referring to the land evaluation, this collateral will be fluctuate, but this land is enough to be protect the loan within 12 months, even if the economy becomes bad, because this land has a high value of 85 million. However, the value will decrease after that if the economy continue bad. In conclusion, the collateral provided by Green Plantation Sdn Bhd is a strong asset. So we can accept this land as a collateral, but with a few mitigation. As a credit officer, we need to use FIN367 framework to make a risk analysis on this loan application. So by referring Green Plantation Sdn Bhd credit history for the character structure for FIN367, this company is consistent and timely repayment of their loan. And then this firm also have a good commitment to meet their financial obligation by making payment on time without fault payment or late payment. Furthermore, this firm also provide clear and accurate financial reporting for RHB Bank. This show that the company has transparent reporting. And then this firm also have good ability in managing the repayment loan. According to their repayment resources, this firm has no debt that show any default payment, but just the outstanding balance of overdraft with the Halium Bank, which is 50,000 only for the 1 month due to insufficient fund. Also, this company has a more than enough sources to cover long-term commitment and ability to encumber its land as collateral for loan with RHB Bank. Collateral structure, the risk that we as a credit officer can predict is that this land worth RM 5 million value will fluctuate with the economic condition and market demand. Because of this application of the loan for 10 years, there is a possibility that the change will occur and affect their value. Even though the value of its land is very high for now, but if the economic condition goes down, and it can affect the market value of the land. However, the value of the land is enough to cover the loan that firm requested. For the condition structure, based on the company performance, these firms may not able to sustain to pay the loan when external influence such as economic decrease or shift of the global demand on the oil palm product occurs. Even the company have a good performance in managing the debt, increasing the sale and managing the asset and operation, the external influence still have an impact on the firm's ability to meet the debt obligation. The capital has been contributed by all shareholders. As a credit officer, we can see that in the firm financial ratio, the financial commitment by the shareholder in the Green Plantation Sdn Bhd show a good performance due to their high financial commitment in the firm. It can make the company face a lower financial risk. Okay guys, after reviewing the risk analysis, the application of loan is within acceptance. But we as an credit officer have to mitigate the several risks based on the principle of lending. There are two risks that we are able to detect, such as inflating value of collateral and the firm is not able to sustain to pay the loan when external influence happen. So these are a few strategies that we can take to reduce the risk. Firstly, the firm need to always update the value of the land and provide another collateral that has the same value or higher value than current collateral to guarantee to cover the loan, such as investment portfolio. Furthermore, by setting the loan to value ratio can help to reduce the impact of inflating value on the land. Next, to ensure the firm sustain to pay the loan during the low demand and economic changes, we as a credit officer need to use the principle of proportionate stake that require all the 6 shareholders to give the best their commitment to contribute in the company to increase the capital for pay the unpaid loan with RHB Bank. Shareholder financial commitment is very important for reducing the lending risk due to the low ability to pay
This
the
is
loan.
the financial ratio of the Green Plantation STMBHD. First is the liquidity ratios. Despite a slight increase from the previous years, Green Plantation STMBHD liquidity ratio remains below 1.0, raising a concerns about deteriorating financial conditions. The steady decline in the current ratio over the years suggests potential issues with working capital management, short-term obligation, or financial difficulties. For net working capital, with a consistent negative net working capital over the last 5 years, Green Plantation STMBHD face challenge as current liabilities exceed assets, complicating meeting short-term obligations. This sustained negative may indicate operation and financial difficulties, reflecting short-term liquidity issues. Next is profitability ratios. For the ROA displays a favorable growing pattern from 2019 to 2022, with 2022 showing a significant improvement. However, negative figures in 2019 and 2020 indicate past financial challenge. Return on equity (ROE) improved from 2021 to 2022, but negative value in 2019 and 2020, along with comparatively low values in 2021, reflect difficulties in providing returns to shareholders during those years. Last but not least, efficiency ratios. The total asset turnover reflects improved effectiveness in generating sales in proportion to total asset from 2018 to 2022. Despite low absolute values, the upward trend signifies increased efficiency in utilizing asset for sales productions. Last is leverage ratios. For variation in gearing ratios such as change in Green Plantation's STMBHD capital structure and debt levels over time. A gearing ratio above 1 indicates a greater reliance on debt, while below 1 suggests a conservative capital structures. However, based on the challenges faced by the company, Citus report and financial management have a favorable status report indicates strong credit history and sound financial management. Despite negative net working capital, the company's profitability compensates, enabling it to maintain operations. The surge in palm oil exports in earning in 2022 contributes positively to various aspects of the business. This is it for me. Thank you for listening.
By its recommendations. Okay, for the previous part that my friend already presented, we can see and recognize they have 3 issues that arises in their company. So the first one is it have a low current ratio in their financial. So this for their current ratio, it shows that it have consistently below 1, and this indicates that they have a difficulty for meeting their short-term obligation. So the solution that we as credit officer, we do recommend them to strengthen current assets or reduce short-term obligation, and they also can negotiate longer payment terms with their suppliers, and they also can explore alternative credit option. For the second one, we can also see the issue is they have overdraft and loan repayment. They have a problem with that, and they show that they are relying on overdraft due to insufficient funds. And this also have a challenges for them in repaying previous debts. So we recommend them to implement strong financial management and explore debt restructuring and negotiate repayments and improve cash flow management. And the last issue is collateral risk. We do realize that they actually use their land as a collateral. So this actually have a problem because if they are too dependent on land as collateral, the vulnerability to economic downturn is pretty high. And the solution that we can give is to evaluate economic impact on land collateral. They probably can expect and prepare for any economic downturn. So this actually they also can implement risk management like reserve fund, and they can also like diversify forms of collateral. Alright, after all of the part that we already discussed, we can conclude that this company, Green Plantation Senior Berhad, is eager to expand its oil palm plantation with a well-planned loan application, positive financial signs, full optimism, and we as credit officer at RHB Bank gladly accept and approved their loan. This reflects our confidence in their commitment to sustainable growth in agriculture. That's all for us. Bye bye.